Is it safe to invest your hard-earned money rather than putting it in your bank where it is safe? And do I have enough time after coming back from work to start investing? Those were questions I asked myself before starting my journey in the finance world. But don't worry, if an ex-mechanic can figure it out, you can do it too. And in fact, you will be surprised how easy it is once you understand this simple concept. How can you get started making your hard-earned money work for you? We'll need to invest it in the stock market. Through investing, our money can grow. As Warren Buffett, the fifth richest man, said, if you don't find a way to make money while you sleep, you'll be working until you die. Think like you're the boss of a factory. Every dollar is a worker, so you want all your workers to be busy. And that's what investing is. Just keep an emergency fund of 3 till 6 months depending on your situation. Every week, when you receive your paycheck, you will be transferring your money to your investing account. Even if it's just $100, you will be able to see huge results. It is important to get your foot in the door as soon as possible, because it is not important how about the right time to buy stocks. It is about how much time you have invested in total. If you don't have an investment account, don't worry, I got you. Check the links down below. With the money in your investing account, you need to buy your investment. Otherwise, it will be just sitting there, the same as in your bank account. I have an easy guide for you. Just keep watching. Every week we will be buying the same stocks. We are going to stick to the plan. Very boring, I know, but efficient. Paul Samuelson, the father of modern economics, once said, investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Vegas. And by doing this procedure over and over again, you will see that your money will grow on autopilot. Obviously, we want to pick an investment which is growing over the long term and not investment which loses money. Start with what you know. Invest in companies or industry you believe in. This helps you understand the market and reduces the fear of investing. My favorite investment has grown 10% over the last 100 years. That means if we do the math, starting amount of $100, weekly contribution of $100 over 30 years, and our investment will grow to almost $1 million in 30 years. The more we invest, the higher return will be. Therefore, if our income rises, we can increase our final investment too. Now, let's talk safety. Is it safe though? And when it would be so easy, why isn't everyone doing it? It's the same question Jeff Bezos asked Warren Buffett, and his reply was, because nobody wants to get rich slow. When investing, there always comes a risk, especially for beginners. Trust me, I made many stupid mistakes. To see some of them, you can watch this link video in which I talk about 5 common mistakes. But here's the thing, not investing is risky too, because inflation is burning your money right now. How can we minimize our risk? Risk comes usually from not knowing what we are doing. Therefore, if we listen to experts and follow their advice, we can avoid them. As I said, just stick to your investing plan. Invest every time you receive your paycheck, and you will be closer to your goal than you can imagine. Trying to outsmart the market, listening to others, or being emotionally attached to investment during bad times can ruin your gains. Most of the times, mistakes happen during hard times in the stock market. During good times, everyone is a genius. One of the most important aspects in investing is to spread our stocks or even investments. This means buying stocks from different industries, sectors, or even countries. Right now, AI is booming. 30 years ago, it was the internet. Who knows which sector will be the next? Your homework will be to do your own research and educate yourself more on that topic. But as I talked about my favorite choice, which is beginners friendly, and the option I'm still sticking with is a so-called index fund, which is nothing more than a big basket of stocks. Within this basket are the 500 biggest stocks like Apple, Google, Amazon, Nvidia, and many more. This brings me a high diversification, and I don't need to worry about which stock will be doing good or doing bad tomorrow. As I said in the beginning, most of us barely got time after work. We come home very exhausted and might need to do some house duties such as cooking, getting groceries, etc. First things first, let's dispel a myth. Investing smarter doesn't always mean you have to spend hours glued to the stock market ticker or drowning in financial reports. This would fall into the category of day trading, something we don't want to focus on because it is very risky and most people lose money doing so. Sure, in the beginning it takes a bit of time, but today I don't even need to look at my investment account. It all happens on autopilot. and it gave me the promised results of 10% per year for me and even my very first client, my mom. Once you set up your plan, you can set it up to be automatic too. Investing smarter with a limited income doesn't have to mean sacrificing all your free hours. Find an approach that suits your lifestyle and risk tolerance. Whether it's dedicating a few hours a month or opting for a low-maintenance investment, there's always a way to make money work for you. Remember, it's about making the time count. Now you understand the basic principles. Let's get started for real. I made this step-by-step guide on how to getting started. Watch this video and start letting your money work for you. And if you have any questions, come back and let me know in the comments.